Last two pharma companies, 1 quarter and a study clearly in contrast. That's the picture Sun Pharma and Aurobindo Pharma's quarterly numbers have painted, and the reaction from the street has also been fitting. Traders cheered Aurobindo's inline performance, Aurobindo by sending the stock nearly 4% higher, and punished Sun Pharma for missing street estimates across the board by sending the stock home down over 6%. CNBC TV 18's Ekta, Batra and Archana Shukla crunched the numbers.
Dilip Sanghvi's Sun Pharma has had a tough time in the January-March quarter. India's largest drug maker saw consolidated sales rise by a lower than expected 25% year-on-year. That's in spite of its US subsidiary Taro turning in a strong performance and strong revenues from exclusive sales of its anti-leukemia drug Glivec in the US market. So sales-wise, the US market grew 19% year-on-year and the India business grew a better than expected 17%. But pricing pressures in the US market meant that Sun Pharma's margins managed to expand to just 33% instead of the estimated 35%. So net profits, which were expected to more than double, managed to grow just 92%. The company said continued pricing pressures and supply constraints would mean guiding for a conservative 8 to 10% revenue growth in the next fiscal. The management, however, says Sun's integration with Ranbaxy is on track.
The implementation of the integration is progressing well. We are on track to generate the targeted synergy of $300 million by FY18. As we enter the second year of integration, we should be able to accrue a reasonable portion of these synergies in FY17.
Upbeat commentary about the progress at Sun Pharma's Halol facility with regards to cleaning up manufacturing practices and the fact that the company may soon invite the US FDA for a re-inspection by end of this quarter failed to get a smile from analysts.
The guidance of 8 to 10% what the management has given is really conservative. The kind of impact what they have indicated on the profitability front because of the kind of enhanced R&D spend or kind of a higher spend towards creating specialty business base in US, all that will to some extent eat away synergy benefit from the Ranbaxy integration in FY17 and 18.
Aurobindo Pharma's numbers meanwhile were in sharp contrast to Sun Pharma's. Sales in the US market jumped 24.6% and European sales rose a robust 9%. This helped the company post an 18.5% jump in net sales in the fourth quarter of FY16, as widely expected. Operating profits surged over 34% and net profits clocked a far higher than expected jump of nearly 40%. A lot of this strong performance was driven by the launch of 17 new products in the US market during the fiscal year. These developments had high-profile investors like Rakesh Jhunjhunwala excited about the company's prospects, especially in the European markets.
How profitable is the European acquisition and Netol?
For last 3 quarters, we have turned PAT positive, and a whole year basis also we have remained in a positive territory. And this is because of the streamlining of the structure and processes. Going forward, we see the India transferred product will contribute to a better margin.
Also working in Aurobindo Pharma's favor is that the company is in the US FDA's good books, with 3 units receiving the thumbs up from the US drug regulator in the last 3 months. In Mumbai with Ekta, Batra, Archana Shukla.